We're working our way slowly through the US corporate reporting season. In fairness, we're seeing quite a few misses on expectations and some fairly big price reactions. We'll be talking about Google very shortly, but despite all of that, the overall indexes remain in pretty strong health. I'm going to start with the FTSE 100. This is the year chart, and we can see here that we're nudging right up again against that sort of top of the range area of 5,900. Been here many times before. The key question in the course of the next few days, stroke weeks, is can we actually start an assault on the 6,000 level? If we would take that chart out a little bit further, we can see that that would actually represent quite a big breakout to the upside on the FTSE 100. So as a reminder, the FTSE 100 has been a laggard compared to, say, American stock markets over time. So a bit of catch-up, I suspect, is well worthwhile. So this is the FTSE 100. This second chart I want to show is of the FTSE 250. This is a very long-dated chart. Goes back indeed to 1986. Officially it was launched in 93, so anything prior to that is a bit of back testing of the data. But from 1993, this is an index that has risen over 5 times, and to put that in some sort of comparison, the FTSE 100 over that period has risen by 2.2 times. So this is really where the action has been seen. FTSE 250 normally, as I say, encompasses the companies that sit 101 down to, say, 350. Still represents some pretty big companies: Domino's Pizzas, EasyJet. These are the sort of names you'd expect to find in that index. And as I say, how the FTSE 250 has outperformed, well, first of all, it tends to avoid the banks, tends to avoid some of the mining stocks, and so some of the volatility there. And I think over time it tends to benefit from companies that witness extraordinary growth and go into the FTSE 100. So FTSE 250 tends to capture the growth before it goes into the bigger index, and often we find that the damage can be done on those companies that have risen too quickly. Damage is more done to the FTSE 100. But anyway, it's an interesting chart, and 20 years old this week. In terms of Google, this was a big reaction last night to the premature release of their Q3 numbers. Indeed, it was so premature that the comments from the chief executive had not actually been added to the statement in time. So we saw a big price reaction, and quite quickly the shares were suspended. In fact, I think it's a record market capitalisation fall in the course of just a very short trading period before suspension there yesterday. Clearly, high expectations going into these particular numbers. It's been a very, very strong performer, and just reversing some of those gains that came out. But Google is an example of more US companies disappointing on their corporate reports over the course of the last few days. And if we turn to next week, we will have companies like Facebook who are due to report. We will also have out on Apple an investor presentation day. So the launch of the mini iPad looks to be on its way. Turning to some currency matters, the EU summit, which didn't, in fairness, yield too much. It was a fair amount of comment out from Chancellor Merkel relating to the banking union. No real progress there, but despite all of that, there has been some reasonably solid growth coming out of the euro, as risk appetite remains sort of favourable to that market. And one other feature which I think is worth pointing out is that a lot of the peripheral bonds in terms of Greece and Spain have been moving quite well. These charts that I'm showing here are the yields that are on the which can be achieved on 10-year bonds. This is in Greece, and you can see there that number is now down to a year low, which is a good sign. It's indicative of some money coming into the Greek bonds. Here we have the Spanish bonds, and really ever since that sort of July point, which is when Draghi committed to ensuring full support for the periphery bonds, well, they've moved in from 7.5 now down to 5.32%. These are really the sort of major drivers to markets over the course of the last few days.